Hello, everyone. Uh, I just want us to look at the cash budget. As you know, cash budget is one of those budgets which can be a little bit tricky, but as long as you follow the information, it won't be that tricky. Please make sure that you go through the learning material to make sure that you understand what's going on. Firstly, I just want us to look at the information. Here we have got a business by the name of Tandolwetu. Tandolwetu Dealers is preparing its cash budget for the next quarter. A quarter of a year has 3 months, obviously, and the following information is available. Okay, so in other words, this is the name of the business, and they gave us the sales. Can you see now? So these are the sales. So the sales for month 1, they give us the month 1, month 2, and month 3. And they gave us this information. Okay, so we need to go through the information and make sure that we decide what to do with the information. Okay, so make sure that you analyze the information so that you can understand better. So they say the following information is provided. They say 30% of sales. 30% of sales are cash. Okay, so we need to remember 30% cash. Okay, and then they say 60% of credit sales are settled in the month following the month of sale. So before we can go further, because they said 30% of sales are cash, so we need to analyze that information so that by the time when we record, all the figures will be ready for use. Okay, so what I will do, remember we've got a different exam technique. For me, as my technique, I'm gonna say, okay, for now, let me just say divide these months. For example, month 1, I've got 350,500. This means that this 350 consists of cash and credit. But they told me that only 30% of sales of these sales, can you see now, are cash. So what I can do, I'm going to say, okay, can you see 30%? In other words, 30% of 350,500 is how much? Is 105, 150. And then the remaining 70% is what? Credit. Can you see? This will help me a lot by the time when I record in the books of accounts. So all those months, I'll do the same thing. You see, so I'm just going to say 30% of it will be cash and 30% of this sales, 70% will be what? Credit. So this is what I will do first. Okay. Now, let's continue. They say 60% of the credit sales are settled in the month following the month of sales. Can you see? 60% of the credit sales, they are talking about the credit sales because the credit sales are not, let's say, instant. Only cash sales are instant because when I sell for cash, I receive cash now. But when I sold on credit, we give our customers the terms of payment. That's why they say only on those credit sales, they're referring to these credit sales. Can you see now? For these credit sales, this is how are we gonna collect from our debtors. Remember, if we sell on credit, we sold to debtors. So 60% of the sales will be settled in the month following what? The month of sale. So meaning if I am in month 1, 60% of that month 1 will be collected in what? In month 2. So this is just a collection policy. Okay, they say the remaining 40% 2 months after. Can you see now? So it means we know now that okay, 60% will be collected in the following month, and then 40% will be collected in the next 2 months. Okay, so this is very much important. They also say the current accounts receivable. Account receivables are the same as debtors control. So we have got debtors. Remember, debtors are those people to whom we sold those goods on credit. So this represents debtors. So they say the credit receivables are 340. Can you see now? So meaning this means that before month 1, we had people who are owing us how much? 340, of which 70% will be paid in what? in month one. So we must be careful by the time when we record in the books. So in month one, we must receive what? 70% of 340. So if we receive 70% of 340 in month one, it means the remaining percentage, which is 30%, will be received in month two. Can you see? So this is how I will do it. I'll just say, okay, in month two, I'm gonna say 340 of 1,000 multiplied by 30%, and I get 102. So this 102 will appear in what? Under the month two of these receivables. Okay, let's continue. They say the purchases. Now they're talking about the purchases. They say they're expected to be 70% of what? Of sales. So meaning by the time when we record purchases, remember when you talk about the purchases, we talk about the purchases of stock. So it's only when these purchases represent stock. So they say for us to know how much will be the purchases for a month, we must say 70% of sales. Which sales? They didn't specify which sales. It means we're going to take the total sales, these sales, okay? The total sales. So this is what I'm going to do. I'm going to say 70% of these sales. Can you see? Of these sales. So you need to be careful. Don't use only, don't use credit only. They just said of sales. If they said cash sales, is then that we would use what? The cash sales. But they just said sales, it means the total sales. Okay. Again, remember, purchases can either be cash or credit. So, but according to the information, they say 60% of these purchases are paid in the month purchases are made. In other words, if they are paid in the month purchases are made, it means 60% will be cash. Can you see now? And then they say the remainder in the following month. In other words, if I have purchases in month one, so 60% will be collected in that month one. The remaining 40% will be collected in what? In month two. Can you see now? And they also said the outstanding accounts payables amount to how much? To 165. So again, this 165, remember, accounts payables are the same as creditors control. The creditors control are people from whom we bought on credit. So in other words, we have currently outstanding, we need to pay this inward in month one. Okay, so we need to make sure that we remember how to do that. Wages and salaries, salaries, and other expenses are paid. Can you see? We need to know this. These are paid in the month they occurred. Can you see now? So meaning the wages for month one will be paid in month one. Can you see? For each month is going to be how much? 65,000. Okay. The cash balance at the beginning of the month, of the first month. So they gave us the balance of what? Of cash. Remember, we need this cash at the beginning of what? Of month one. It's going to be how much? 35,000. And the required minimum balance is how much? This will be recorded at the end. So I will show you how to do that. Can you see now? So at the moment, we analyze the information. We just have to go and make sure that we record. Please pause this video. Make sure that you have got this question so that when I go to the next slide, you know what is going on. So firstly, you need to analyze. Now let's go and record. Now, let me go to the next. Now, this is what we call the cash budget. So we need to now go and record. Remember, firstly, we need our sales. And those sales have been divided into what? Into cash and the credit sales. Okay. So if you remember, according to the information there, if you go back, the sales have been given to us there. Can you see these sales? So in line with sales here, can you see I'm going to copy those amounts as they are. You can even check that those are the total sales. But remember, they told us that 30% was cash sales. It means the remaining 30% will be what? Credit sales. Remember, the credit sales are represented by what? By the debtors control. So the 70% will be on this one. Okay. So let me go back and show you how I do that. So meaning it's the cash that I'm talking about. These are the amounts that I showed you here. Can you see now? So now we must go and put them there. Can you see? these are cash. So how do I do it? So I did show you the calculation there. It's just that I'm just showing you the calculation here. So these amounts, as you can see, are the amounts which have been calculated from the previous slide. Can you see now? I just gave you the calculation again. Again, you can still go back to where I analyzed. You'll find this more information. Okay. Now, this is the case. You can see it's very easy to find the case sale. So I just took 30% of this amount, 30% of this amount, 30% of this amount, according to what? To the information given to me. Now, secondly, now I must deal with the accounts receivable collection. Accounts receivable is the same as debtors control. Okay, you can call it debtors control collection or debtors collection. Okay, so remember, cash was 30%. Here it is what? That's 70%. Can you see now? So that 70%, if you remember very well, they said 60% will be collected in the first month, and then 40% in the what? In the second month. So this is very much important. So I just put these things so that you can understand. Okay. Now let's continue. Remember that first month when they talked about the 340, if you can go back, they gave us the accounts receivable of 340. They said the 70% must be collected when? In the first month. You can even go and check from the previous information. So 340 times 70%. I also gave you the calculation from the previous slide. Can you see that is the 238,000? Remember I said if this was collected in the first month, the remaining 30% will be collected in what? In the second month. So I'm going to show you thereafter. Okay. Now let's check. Remember we are doing the collection here. Now we have 350. Remember this 350, which is the month one. Remember the 70% was on credit. So I did show you the 70% already on the previous page. But because I don't want to go back to the previous page, so that's why I showed you the calculation here. So 70% of this amount is credit. But 60%, remember it is in month one. So 60% according to the collection policy, 60% will be collected in month two. Remember they said a month after. So because it comes from the month one, that's why I collected in what? Under a month two. Can you see now? So 60% is going to be 147,210. Can you see now? So it means 40% will be collected when? In the second month. Can you see? So meaning 30%, as you can see here, is how much? The 40% is how much? Is 98140. Can you see now? So this was collection of month one, focusing on the credit part of it. Can you see that? So here I just showed you the calculations again. Otherwise, you should have gone back to the previous slide. You'll find where I separated cash and credit. You could just take the 70% and put it here. But I gave you the calculation again, as you can see. Can you see now? So the 60%, remember, this is the 350, which comes from what? Month one. So the credit sales for this amount will be collected in month two, and thereafter the month after. That's why I put it in second month. Okay. Now, because we finished with month one, let's start with the month two. We're in month two. Remember again, the month two, we need to do the same thing. Month two, let's start. Remember, first month. So we say 400,000. Let me just put this down so that 400,000 times 70, because I'm focusing on this one. 400,000 times 70%. Remember again, this 70% has been calculated already from the previous slides. You can go and copy it and just put it here. Multiply by what? By 60%. Why? Because 60% is collected after a month. Because I am in month two. 1 month after is month three. That's why I collected 60% under month three, which is how much? 168. So it means the 40% of this month two will be collected in what? In month four. I don't have month four. That's why I don't have 40%. So I'm going to stop here with this month two. Can you see now? Okay. Now let's continue. Remember this 340. Remember here I said they told us that 70% was collected in what? In month one. I told you that the remainder, which is the 30%, will be collected in what? In month two. This is what I did. So if you say 238 plus 102, can you see? This is the amount will find. So 102 will be here. It comes, is the remainder after collecting what? 70%. Okay. Now let's continue. And then here, obviously, we have got nothing. So please make sure that you know how to do this. So this format can be a little bit confusing, especially when they said first month and the second month. But just try to understand, because sometimes you can, even if they didn't give you the format, you can use your months here. It's easier with the months. Okay. But unfortunately, in the exam, sometimes they force you to use a particular format. Hopefully, this thing makes sense. Okay. Now I've got, remember, I just have to add all my, please be careful, don't add sales. Ne? Sales were just there. So you must add cash sales plus accounts receivable. So when I add these two, I get this total. I added 105,150, plus 238,000. I got what? 343,150. The same applies here. 120 plus 147,210 plus 102,000. I got 369,210. Check my calculations, guys. Remember, don't add sales there. You can just draw the line so that you cannot make a mistake. Okay. And then even here I have 124,500 plus 168 plus 98, 140. I got how much? My total receipts of how much? Of this amount. So you can also call them total inflows. It's up to you. So now I'm okay with what? With my cash inflows. Now I'm gonna focus on what? On my cash outflows. I hope this makes sense. Okay. Firstly, remember again, we need the total purchases. Remember, they told us that the total purchases are what? They said it's 70%, remember, of the sales. I'm just going to go. If you can check from the information, guys, I don't want to go back. So if you say 70% of this, you get that amount. 70% of 400 is what they told you, just for whatever they say. 70% of what? Of 29, of what? 415,000, you get 29. So this is what they told you to find the purchases. Remember, these are the 100% purchases, but they told us how to pay those purchases. So remember, 60% was paid in the form of cash. So it means 60% of this, can you see now? 245,350 times 60% will be paid in what? In month. And month two, the same thing. 60%, and month, it's very simple. So just have to say 60% of 245. Okay. Remember the accounts payments, they did us that. Remember, they said the accounts payable given to us was 165. This must be paid in what? Month one. And thereafter they say 40% of this amount will be, remember, 60% was collected. So the 40% of this amount will be collected in the following month. It's what they told. That's why I have got 245,350 times 40%, and I collect in month two. According to the policy, they told me that we have paid the remainder. They just said the remainder. So I know that if purchase of 60%, the remainder will be 40%. So 60% is instant. That's why 60% was collected in the same month. That's why I said 60% of this amount, and I got, can you see this amount, 60% of that amount, and I got that amount. But 40% will be a month after, because this 40% is for this month. That's why it has been collected in what? In month two. So 40% of 280 will be collected in what? In month three. Can you see now? That's how we do that. Okay. And the wages, salaries, and other expenses, remember, they were given per month as 65,000 per month. So I'm just going to put 65,000 like that per month. Okay. And now again, I must add all the purchases. Remember, I must not add the 245. I must start from 147. Can you see? 147. This is the total purchases. Please, again, you must not add them. We just have to add what from 147 from cash purchases. And then I get how much? 377,210. And then here I get 331. 140, here I get 351. Remember, please do not add the total purchases. Like there, we don't add the sales there. We start from the cash sales, here we start from the cash purchases, and we add them to find the totals. Guys, if the totals are wrong, please bear with me. I'm just showing you the principle. And after doing that, we need to find our net cash. Our net cash is the difference between the total cash receipts and the total cash payments, the difference. So if you say 343,150 minus 377,210, I get how much? I get 34060 in brackets, because obviously this amount of 343 is less than the amount of 377. The same applies here. 369,210 less 331,140. I get what? 308,070. The same applies to this one. 396,40 less 351,300. I get 393,40. Okay, so this is very much important, guys. Make sure that you go through this video several times. I'm telling you, it's going to make sense. And again, remember, we did this in class. Make sure that you go to the solution that we had in class and then just compare with what we did. Maybe in class we missed something, because I suspect that maybe in class we missed something, like especially this 102, but just double check so that you can understand better. After doing that, we need to bring that opening cash balance. If you go back to the information, we were given the cash balance of how much? Is it 35,000? Yes, 35,000. Can you see? It's a positive amount they told us. So you put this 35,000 here. Can you see now? And now you take your net cash and you add the opening cash balance. As you can see here, the net cash under month one is a negative, but the opening balance is positive. Obviously, when we add the two, we're going to get what? A positive how much? The closing balance is going to be what? The closing balance is going to be 940, because 35 is the biggest. That's why we get a positive figure here. Okay, so this is the closing balance for month one. And remember, the closing balance for month one will be the opening balance for month two. Can you see now? So under month two, opening balance is going to be what? 940. You see this 940. So the closing balance for month one will be the opening balance for month two. Now we do the same thing here. We look at the net cash and the opening cash balance. The net cash is here how much? 38070. The opening balance is 940. They're all positive. We add them together. We get 39010. That is the closing balance at the end of what? Of month two. Of which this will be what? The opening balance of what? Month three. Can you see now? This is the opening balance of the month three. Same thing here, 39340, which is the net cash, plus opening of 39010. So if you add them together, get what? 78350, which is balance for what? Month three. So if I had the month four, this 78350 will be the opening balance for month four, just like that. Are you okay? No problem. After finding your closing cash balance, now you must have to bring back that minimum cash balance that they have given. Most cash balances end here. Can you see now? But for us, they give us the minimum that we need to have. They said we need to have how much? 10,000 minimum for each and every month. But as you can see here, it's either we're going to have the excess cash or finance required. We only had 390 for 940 here, and then the balance was supposed to be what? 10,000, meaning we have got a negative balance, because we were supposed to have at least 10,000. Okay? So that's why we've got a negative balance. This means the finance is required. Okay, but in this case, they're all positive. It means the excess cash, we had surplus in a way. Okay, here again we had a surplus here. You see now? So that's why we have got a negative here. You can just say 940 minus 10,000. You can see now the negative here at the end of the day. Just put it as 10 like that. So three here, they're all positive. No. Sorry. So here 39 and then 10,000, we get 29. 10. Can you see? We had extra cash. 10,000, but we made more than that. Here we expected 10,000, but we made more than that. Can you see now? But here we expected 10,000, but we only made what? 940. That's how you must do that. Okay, so just make sure that you remember to find the difference. Okay, so I think that this makes sense, guys. Make sure that you go through the video, and thank you very much for listening, and I hope that you will practice more by using what? Your books. Okay, so make sure that you use your book for that revision. Thank you very much, guys, and then have a good